testing. I think I'm live, I believe. I'm not sure. Let me see. Let me share my screen. Let me see here. Hello, testing. 1, 2, 3. My life. Let me see, somebody say something. Well, I'm waiting there. Maybe it's too early. It's a while now. I guess everyone is busy with the market because it's moving a lot today. 1, 2, 3, testing. Today is going to be about. Alright, so am I start or not? I want to know if I'm live, please. Anybody there to tell me if I'm live? Hope so. Microphone good. Camera good. Audio not good. Oops. Alright, so let's check that out. Let me see. Maybe it's because I got the wrong audio. Hold on. Testing. Echo bus too high. Okay, let's do this one. Alright, and then we can increase this. Okay, 1, 2, 3. This is the one. Hello, testing. Echo bus too high. Still high? This is better now? Slightly better. Alright, so it's not that good. Alright. 1, 2, 3, 2, 2, 2. 1, 2, 1, 2. Alright. It's slightly better. I need to fix this. I'm not very good in this technical stuff. My best friend Brian, he was the one who was helping me, but he's dead. It sounds a bit weird to talk about that now, but this my friend is just gone. But well, just was my friend helping me with all technical stuff. So I learned something from him, but no, I'm not very good. So there we go. That's for him. Alright, so let's work this out for those who are still here. So today is about, let me see if I remember well, it's about pattern and momentum. So if that's right, let me see, let me share my screen. I'm gonna share my screen now. Let me know if you can see the charts. Yeah, so I'm going to doing the charts. Trading view. I'm gonna show you what am I looking for to know the market direction. This is what we're looking for: patterns and market direction. Or if you want, okay, let's ask to everyone, what would you like me to talk today in more details? The plan was to discuss about pattern recognition and momentum direction. Let's see if you can see the screen now. Yes, it's coming up. Let's take one pair, maybe euro dollar or euro Audi. Check the rate. Okay, so we have subscription and comments, so we can more trade here. All right. I don't know if you can see my screen, to be honest. is coming up now, slowly. All right, let me remove all these indicators. Remember what we discussed last week about indicators and how you can use them. This is going to be now a naked chart, but this time I'm going to show you volume. Yeah, even if it's Forex and it's the past, you will understand some kind of connection with it. So I'm going to make sure let me see if it's centralized on the screen correctly. Make sure that is show correctly. Hold on, just bear with me. So let me go for a let me see pattern, conditions, and momentum recognition, practice market behavior. Okay. Yeah, I'm going to move the charts in a minute. Just looking for to add volume into. So let me see volume. This is volume. Okay. So this is how learn for me to know. It sounds to be a bit weird, yeah, but this is the way it works. There is patterns and anything that you can see on the chart, and at the moment I'm not sharing anything, I'm just talking, yeah. I'm preparing now the screen to make sure it's clear. Okay, 1 second. Let me make it on one corner to be visible correctly. All right, I think that's the right spot. Let me see, and let me prepare the screen for you guys. Okay. And I hope so it's clear. Let me see. So okay, so I'm just moving my chart right now. 1 second. Let's see if it get in place correctly. Yeah. I need to move a bit up more volume to be see volume. Okay. Okay, I'm just moving the volume up. Okay, now we have it. All right, so let's talking about how identify a combination between volume and what is called a momentum. So we're looking for to know what is the market direction. And why do we need to know that first? This is the first question you need to ask yourself. Well, if you do know in the market direction, you go much more high probabilities to be right. If you go more probability to be right, you will have more probability to make money. Yeah. Sorry, 1 second. Just coded the bell. All right, so let's go back to what we just discussed now. So we're looking forward to the combination of the direction of the market and the price actions as well. So obviously it's easy to see when something has already happened that the market take direction. And one of the things we cannot see on Forex is actually see the volume pretty much live moment, because it's more like it's privileged for the banks, not for us. So, but we can see the past. The past doesn't mean they guarantee the future, but it's a good pattern record. That's what it's called, pattern, something repeated again and again to be able to see some momentums in the market. So let me show you the volume, how I see volume. Yeah, then you will be able to understand what market direction is going to or not. First thing first is that we need to thinking about who moved the market. Do you remember this? We discussed this, the hedge funds and the bank moved the market. Now, do you think banks that they're looking for maximum 10% a year, if you're looking for a bank that try to make 10% a year, do you think they're looking for 1 minute entry or 15 minutes entry, 1 hour, daily entry? No, they're looking to actually to have the job done, keep the trade moving for a year. Yeah. 6 months, 3 months, I would say 3 months minimum. Yeah, let's keep it 3 months. This is what I've been always heard on the trading floors. Yeah, from when I was talking to the top traders at that time. Yeah. Anyway, 3 months is a good amount of time to be taken into consideration. Now, let's have a look at the volume. So I want to go long, but I'm looking for to be a bank. So let's think in Ayana Bank and I'm looking to go long. But let me recap this one more time. Why we want to go long? Because if I know it's going to go long, then I know the probabilities to be right is actually for me to go long all the time until it changes market conditions. Yes or no? So you're not looking to go short, even if your strategy says short and long, short, long, short, long. You're looking long because your big momentum from the volume of the market plus the price action, they tell you, this is an example I'm gonna give you, is telling you it's gonna be long and no short. By probabilities, remember this is maybe 60, 70%, 80%, we don't know. We're not gonna use any indicator, we're gonna check only the volume and the price and the correlation between them, yeah? Let's see how it works. Okay, let me see, let me show you. So, to start with, I need to think in Ayana Bank. So I'm gonna move to a month. Okay, now can you see there's actually something happened very, very clear that the volume changed drastically in 2022? Yeah, it's massive change. What is the meaning of that? Is we have two different cycles, okay? So automatically you need to, if you do back testing this per Euro Australian, you testing from here forward, from there backwards. So you don't actually make these correlations, is not the same volumes that you have in this period. If you notice, it's massive changes, yeah? Okay, so this is actually clear. That's what you see on the monthly. I think this is when they start the war between Ukraine and Russia. That's where you can see the volume change it. And doesn't matter whatever actually happened. What you know is that something happened that changed the volume drastically. Yeah, that's clear. Yeah, look at that, how simple, how basic, or how low compared with this one. Doesn't mean there's no peak here, but and doesn't mean it doesn't move. But it does mean that it's very, very little difference, yeah, from this side to the side. So from that, we're gonna do something. We're gonna make a separation between those two. We're gonna make it in here, okay? So from that moment, the market is different. Okay, now looking for monthly levels. So let's do first a very basics of volume, price action blocking levels first, and then we're gonna correspond it with the volume, yeah? Or vice versa, we're gonna do both ways. So first we're gonna start from check the levels of the month. So the volume is increased drastically. So now forget about this. So it means I need to forget about these candles there. So I'm gonna start from there forward. So I got massive volumes now compared with that. Something happened. I don't care what happens. I need to know where the market is taking me. So let's start to, well, I don't know. It's just actually first month, second month is like you can start even doing the first month at the time, but we're talking about 3 months minimum. So we go 1 month, 2 months, and we go 3 months here. So, okay, so we go first 3 months here, we go 1 month correction, then we go 3 months up, then we go 1 month correction, 1 month, 3 months. Can you see that 3 months? 1 month, 1, then we go 2, then we go 2, then we go 4, you're looking for 3, you go 1, 2, 1, 1, and then you go 3 here, yes? So if you notice, there is group of 3, or quite often, and normally happens in a particular area. So let's actually do that and see which ones are, yeah? So let's go for that. Let's make it a line on those 3. I'm gonna make it all of them highlighted. Those three. Do we have red ones? This is red, this is green, and this is red. Yeah, and this is not going anywhere. And this is going down. And then we have here 3. Yeah, if it's more, doesn't matter. We're looking for 3. Yeah, and actually it's 3. So now we do have this numbers, yeah, or what we call it locations. We go too short, 2 months they're going short, and we're going 1, 2, 3, 4 months is going long. Okay, this is our first pattern. Okay, now what we need to find out is not those 3. We need to find out what happens before those 3. Yeah, so let's have a look. Let's see if we have something clear, and we're gonna use the volume from that. So we got this volume is quite large compared with the next 3. Yes, but you see, you notice that this volume is about this volume of this one. Yeah, can you see that? Let's highlight it. How I can highlight it without making it a big mess? Hold on, let me make it a different way. So what I can do is highlight by boxes for you to see it. Let's see that those 3 maybe. No, we're gonna make it by something like that. Okay, those 3. So be with me, yeah, forget about the price fractions is going up or down. We're just looking to find a pattern before the pattern happens, yeah. So we're gonna go there and we go those three, okay. There we go, those three, 1, 2, and 3, and we're gonna go short on here. So it doesn't matter, it's 3 there, and then we go 3 here, yeah, and we're gonna find out these 3, okay. So then we go those 3, and then we're gonna find another one here. Now 1, 2, 3, okay, there, okay. So this is what we have now, okay. We have our 3 blocks, yeah, 3 blocks, 3 blocks, 3 blocks, 3 blocks. This can be done by 2 blocks. I'm just telling you 3 blocks for me because this is what I believe Banks is doing it. You may actually see another pattern. I prefer to do a pattern, a special one that happens every 4 months. That's up to you. Yeah, this is what I've been looking for myself. Okay, this is an exercise. Remember, you can actually do all the potential combinations between 2 long, 2 short, and so on. Yeah, ranges are looking for to get into the market into the right direction and then know what to go long or short before it happens. Okay, let's have a look now. So we're talking about the candle before, but I'm not focused now on the candle anymore. I'm focused into the volume. And we got this, it's going from high, even higher, and the movement ago, and then we got this shorter than this, then go up, then down. You got this combination. I don't know if you can see something there. Let's keep it that way. So we got this candle, okay? Those 3 formations. Now, then you got this one here, and this volume it doesn't matter what the price is. Now we're looking about the volume. That we got those 2 volumes, and this is actually higher than this. Yeah, again, this is higher than this. Okay, the second one. Okay, fine, keep going. Let's see if we can find more relations. Okay, now we got those 3, and this is the candle before. This is slightly bigger volume than this. Can you see that? It looks like we have a pattern. Let's have a look now in the red side. So it have to be the other way around. I'm very bad to the opposite. So let me see, because I'm always doing stocks all my life. So this is supposed to be bigger than that one based on the same structure, and it's not. Yeah. So in this case, it's not doing the same pattern. Okay, we have one. Let's change the color because this didn't work out the same way. Let's make it yellow. Yeah. Well, no, yellow you cannot see it. Let's make it I don't know, light blue, neither. Okay, let's make I don't know, black. Okay, you can see now. Yeah, you can see better now. All right, so let's go to the next one. Yeah, so we're looking for, well, this is the 3, those 3. Yeah, and we're looking for the next one before this one here. All right, so let's see with the volume. This actually is larger than this one. It's supposed to be larger than this, and then go short. It didn't happen. Now, based on our ideal first pattern, yeah, I can give you hundreds, well, not 100, but I can give you at least 10 options different, which will work in how to actually recognize the market direction. Yeah. Now we got another example here, and now if you notice the same thing, this is exactly probably slightly based on normally how it works. Normally it will be slightly up the same. Yeah, is the same volume? Yes, it's the same volume. Even if we zoom in, let's have a look. I want to know if it's exactly higher. Yes, it's slightly higher, very tiny. Yes, it is higher. Okay, perfect. So we have our pattern. Now, when do we trade this pair? So based on these movements of the last 1, 2, 3, 4 years, we have a pattern that will tell us high probability to go long or short 1 month. It's not that much, but it's 1 month. So when does that happen? So our pattern, you see, I'm looking for patterns combination between volume and price actions, but I'm looking for, this is my pattern or my area for trading, those 3, then we got those 3, those 3, and so on. In these 2 cases, and this one didn't work either, no, it didn't work. In this one, let's make it black. So those 2 didn't work. So on the shorts didn't work, on the long works. Okay, so maybe I need to find something else to make me this clear that I can trade those ones short. Yeah, because it's that decent amount always from here to there. But I'm looking for a pattern, and this is the idea of pattern recognition from the direction. So now we have a pattern. This happens in this month. So the month is over. The volume is bigger. So what am I going to do on the next month? I'm going to trade it long here. Okay. So 2 months in green, one red. This is combination. This is lower than that one. I got the market direction, so I'm gonna trade this one low, and we're gonna see in a minute. Yeah, we're gonna go deep into that one. Now, next one. Okay, and this is one pair. You can actually imagine doing it with all the pairs. Yeah. Now this one, the same thing. We know that the volume, this one was bigger than this one. Even if the candle is massive equally, you see, you can price action can make you thinking wrong. But this volume is lower and this is bigger than that one. So what does that mean? The next one is gonna be green. This one. We have found this, the red ones didn't work out well. So we're gonna actually probably escape if we see now something in the future. Now the next one, we got this volume, and this volume is bigger than this one. So the next month is going to be in green. Now we're gonna find another one. I see, I'm looking. Let's see if I look. This is red, 3 greens. This is red, 3 greens. Red, 3 greens. And we go. This is combination. We can say high, low, low, high. Those 3, they're working in different patterns. We can actually work out as well how the behavior of the 3 of them works out in between them in correlation with the previous one. Those 3 and that one. Those 3 and this one. And you can create combinations of when this is happening after. But the problem is that you want to have a place to trade. So then you need to combine those 3, not this after. So you want to first to start with this combination, those 2, 3, and then 1, 2, 3, and then you create a pattern in here. Okay, let's go for the next one. We know this one, if it's actually short, I'm not going to trade it. So the next one is going to be this one. Let's have a look. Volume is bigger than that one. Yes, we say it's very slightly. The next trade, it will be there to be traded long. Okay, so now we have our pattern, but I need to know how to trade it. So I've been selected the month, yeah? So this is my month of let's make a note. Well, I think you can see that easily, no? So this is my month to the beginnings of the month, 1st of June, this month, a month. Okay, so we have in total of from, well, how many years is that? 22, 3, 4, 5, for 4 years, we're going to trade only 1, 2, 3, 4 months. Okay, you're thinking, Danny, but this is not enough. This is very little. Well, this is one pair. Can you trade in other 28 pairs if you do 28 more pairs? Let's make the maths. Let's have a look. So if we do 28 pairs times 4, 112 months that you know the market direction. So would you have enough trades in a year? If you have 112 in 4 years, we divide that in 4 years. So you potentially have 28 entries or 28 entries per month in one and you know the market direction. And with the probability, this is quite high probability. In this case, it's look 100%, which is a very weird one, but it happens. It's working very well. All right. So now that we have our pattern, obviously, now we're going to use our volumes into much lower because it's the beginnings of the month of April 2025. We're going to use this one as an example. Yeah. You can use any of the others, but you know that you need to do whatever you do in this one now, in this candle, you need to do in the other 4 to see if it really works. You know how to handle the entries. So now we're going to go back to, now we're going to go down to 1 week, okay? So this is the first day of the day, is 31st of March. We're going to go into day. So in here, 1st of April, we got an entry. We need to start go along from here, okay? So now we are in the daily, yeah? And what do we say about the 3 candles and the previous one and all the stuff like that? So is this the same thing apply for a 1 day? Maybe more, because what is actually equivalent of a month is 30 days. Do you want to use 30 days pattern? You want to use 6 days, combination of 7 or 8 days, 2 days, you name it. You need to find out your own pattern based on what I've been saying before. So in this case, we can see that we have 5 days consecutive long, yeah? So do we have more combinations of 5? There is another 5 here. So let's say this is the 3, 4, 5 days consecutive long. What happened on the previous one? The same thing apply. So we got this one and we go 3, 4, 5 candles. Forget about the rest. Yeah, it's going up and more. I don't care. I just want to know when is actually my right day to go in. So imagine this is your 5 combination, 1, 2, 3, 4, 5. You want to know this is massive volume in here compared with a 1. So what do? You do the follow. You enter here. So you know, sorry, you don't enter here. You do know that you can enter in there. You know here that you can enter because the volume is larger than this first. So you go 2 greens, 1 red, and potentially you can trade for 3 days consecutive. Yeah, a massive proof, man. Look how big is this proof, this profit. So to give an example, 5.58, that is a lot. This is this I can tell you that 0.8 is equal to one very good day trading. So you go about 558. So if we do that number, 558 divided 0.8, you got about 7 very good days on money in your pocket on 3 days trading. Yeah, this is just 3 days. That's it. Now let's go back to the previous one. But this one, previous one, you cannot take it because you don't have the month direction. So we're gonna move forward. It's a good idea that you couldn't trade here, yeah. And you say, Danny, but what about if I take a 1 month, you need to design that yourself. You can move it down from up, down, and all the way up, yeah. So I'd rather to go minimum. I like for me to do monthly, but maybe you want to do weekly and try to find a combination of that. If you go down from monthly to weekly, I would say you go monthly, 12 weeks. Yeah, I think it's 12 weeks, 13 weeks. You go down 12 weeks and then you measure the same principle. Yeah, but they become more complicated because you have more noise and they become more problematic. Yeah, so it's up to you. Find it too, it's good to have. Now, but if you notice here, I make 7%, is about 7 days of profit. Yeah, equivalent of 7 days of profit. This is actually a ridiculous amount of money in just 3 days. Just to give you an idea, because I start trading here on the bottom of this, based on my volume combination, based that the month say to me I need to go long from here. So I wait for my entry, happen this, I go for my entry there, and I make all these 3 days, I'm actually profitable. Yeah, I may actually lost the last one, but I make 1, 1, 1, 1, and the last one maybe I lost it, and I go 1 loss, and I go 5 winners. So 5 winners, they can produce 3, 4, 5, 10 hours in this particular case. Yeah, easily if you know how to handle it. So you need to focus now when you got the pattern recognition based on volumes and direction, then you can actually focus into those 3 days and see how you handle it. Yeah, and don't think, oh, that's it, an entry and I put my stop loss all the way down here. No, you need to focus in those 3 days and zoom in into 4 hours, 1 hour, 3 minutes, 1 minute, and looking into the real data, because you've been filtered the trades to the maximum possible to get you the maximum opportunity. So you go for it. Yeah. So you need to look into more details. All right. So let's continue. We're looking for the combination of 5. Yeah. So which means if I got we say 2, maybe this is 2. So after 2 days, 1 green, 2 is happening 2 days. Let's say if you have a volume bigger, then we're gonna take losses. Let's have a look. So after these 2, let's say, okay, I got 1 red, 2 greens. Yeah, I got 1 red, 2 greens. This volume is bigger, I enter. So let's have a look. We got 1 red, 2 greens. So supposed to enter here, but this volume is not bigger. You see, volume is not bigger. So what happened? The market go down. So let's have a look at another sample. Obviously, it's not gonna be everything the same. Those 2 volumes, the last volume, you say, oh, this is 1, but it's not 2. Where is number 2? It's not. 1, 2 is not. So we go 1. Sorry, we're 1. This is 2. This is 2, but we do not have volume. Red. Yeah, this is actually bigger. So can we take this one? But no, it's the first one. We need to first second one. We go 1 and 2. 1, 2. You see, what do we do? We take it. Let's say we take it. We take as well when it's the first one. Yeah. Do we take it? Let's take it. So what happened? I take this one. So what am I gonna happen after this? If this is bigger than this, I take this trade. So I go. I expected to have 3 days, 1, 2, 3, and only go 1 and 1 tiny, and then go drop. So maybe actually make some percentage there. Let's have a look. Let's see, and we go just 0.8. So I got a very good, 1 good day of trading. Yeah. In my strategy, you may actually find another way to enter, but you go and enter here, and then you may actually enter there, and you end up to lose in the next one. Didn't work very well. Okay, let's focus into the next one. Now, we got all these reds. So we're looking for a green bar that take over of this one. You can enter to in the next one here if you want to. You see that's where you start to measure the entries and see how many entries you got and losses. You know the market direction for now for 1 month. So what is the meaning of that? We're going to trade the month of what's that? Sorry, I think we already passed the month. 1 second. So it's May 30 here. So this is my last day trading. So I don't need to trade more. Yeah. Because it's high probability they will go short. Now, do you say that, oh, high probability will happen after 3 months, normally the market will go down? You need to study that. I don't know. You need to study that combination too after. See, first you need to focus into a logical assumption of what the market is going to do on the bigger time frames, and then from that start to build a pattern recognition from up after and before. and during, when you are actually take the trades, yeah. So in this particular exercise of this month, yeah, we have a very massive winner of equivalent of 7 days, we said here. Then we have a what was that? What was the loss here? We got well, we got one trade here, winner. Let's say that we lost the last one always. So we go from 7 days here. Profits, we lost one trade. We got 6 winners, 1 loss. So and then from here you got a 1 winner, 1 loss, so break even. From there you have this is bigger than that. You got 1 loss here. So we got 1 break even, and we got 5. So we got 5 winners. And then 1 loss. So in total we got 4 winners. So we make equivalent of 4 very good days of trading, which is equivalent of depends on how much percentage you're risking, but it's about 10-15% all in one trade. Do you want to trade more? Yes, you can trade more, but you already have a pattern found it. Do you want to waste your time all this, or you want to find another combination of high probability to make money? Look how good it was this. Yeah, amazing. Let's have a look if we can go back to the other month. Let's see if I can go far away from this. Let me see. Let's choose another month of those that we selected. It was this here, the month of, what was that? Monday, the 3rd of April, 2020. Let's see if I can go that back. Yeah, let's see. Really, I believe I can go there. So let me go into weekly now. So, okay, this is my month of trading. So then we go daily. Okay, this is my daily month, yeah? Yes, okay, so this is my first day. What is the third? Oh, because it's weekend. Okay, the third is the first one. So we're gonna do the same pattern. I'm looking for an entry the same way. I'm talking about this is a possibility. Yeah, you can actually find another combination, but let's have a look at this now. So we go all these days to go long. So let's have a look. So I'm looking for a bullion. This is my bullion. This is green, but it's below the red. So I'm not trading it. Now go those two, go red, go on red. And now this bullion, that's the first time is below, is above this level. So I might take it. We say yes. We say we're gonna take the first one, as some people prefer to take after 2 bullions. So the first one instant has happened. So I'll take this one. So let's see if we can make something on the next trade. I don't think so. We make much. Let me have a look. Because normally I go for the open and to the high. It's 0.29. So this is a lost trade for me. So let's keep going forward, and we got a what's that? This is a bit high. It's big as well. So do we take this trade? Yes, we take it. We follow the rules. We take the trade. We lost another trade. I can see that clear. It's lost. Now we got this not going anywhere. These volumes, when is the breaking? Here. This volume is bigger than that volume there on the day 3. Remember, we say 5 days maximum. So from this day to that, we go 2 days of trading. So let's have a look. So from there, I traded long, and I got a, oops, I cannot see it. It's about 134. So it's about 2 good days of trading equivalent. On the next day, you lost. So you got like two good days of trading, which is, as I say before, you made 5-6 hours, and then you lost 1 hour, so you're still making 6-7 profit. This is very good profit as well, even if it looked nasty on the next day. So you see, so this is the way I do work out a combinations of volumes and direction. So you can actually see the squidge of the market, how the volumes behave, how the volume is being taken over, for example, here. And you can actually study that as well, independent from what I've been saying to you by the market direction, like how volumes behave when it's bigger than the other one. Massively going down, 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 and then there is a correction here, and you see a movement of the 3 candles. Let's see another example of like that. Let's see, let's go for, this is actually the opposite, you see, volume up, then going down, and what happened? The market's going sideways, not going anywhere. Let's have a look at another example of going volumes down. In this case, it's going up. What was the pattern we're looking for? We're looking for a correction like this one. So we're looking for down trend volume. Let me see this one here. So you see volume is flat down. Oops, I don't know if you can see now. Flat down. Then you go the first time it's going above the volume, and you're going in on the next one. You see, potentially you can use that as well. There's many options to working this out on volumes, yeah. But you need to work out in the right month too, in my opinion. So I'd rather to do that way, but you can actually work out day trading into this and say, okay, where I'm going to go, long or short. So you're looking for the volumes. You see if the month is the previous month was green, so you got high probability to the next month with green too. But you can actually focus into the day entries daily. So let's have a look volume here. We got this up, this down, this up, and this is above this level. So then on the next one you enter it long and you make some profit. So the same thing, this is going up, down, and this is below. So I don't enter here, it's too low. So let me see another example. Look, this is a good example and a loss. Look, down, this up, you see, you take it, you lost it.
You need to be honest with yourself. And if the trade doesn't work, it doesn't work. Don't try to actually to figure out a new combination to fix this out. Take the loss. Just follow the rules. Yeah, whatever rules you make. Don't start to make rules on top of the rules on the rules on the rules to always win. So make sure that you actually upset the losses. So this is very, very important. Upset the losses into your own rules. Okay, don't change it constantly. All right, because you try to win all the time. Oh, maybe I can do, if it's too high, too low, I don't take this, I take that, whatever. Imagination come up in your head and you say, wow, when you see this one is a specific pattern that I create myself and it doesn't work or whatever. So just ignore that noise, okay, from your head. Find one pattern, follow it. If you got a new idea, make a note. If you go 1,000 examples, then make the changes. All right. So let's have a look something that we can see here. Volume is up, and then it's going about this. But look at the sample here. This volume is higher than this one, and it's going up, this 3, yeah? But now we're gonna go for the next one. If we actually want to understand this behavior, let's have a look. We go down, this is higher, yeah, this one in there, and the next one is higher, solid high. So we got the first high on this. So if we remember when people say high, low, look, this is the lows, this is the highs, this is the lows, yeah, this is the highs, it's higher than this, and we go higher than this. So we got a block of direction, we got a block of direction. Let's have a look at the next one. This is actually lower, higher, so we got a block of direction, and it actually respects the stop loss if you think it doesn't stop loss for you to continue adding. Then you got those two. This is the biggest one after, so it's like that would be this one compared with that one. So this is in the next group, and I go up. And then you got this one here. This is a combination of those two, which is there. So this is your stop loss in there. So this is the 3 combinations. So 3. So in this case, you got a something like this. Let me show you. If you want to study these trend movements, because you need to understand. If you make a rule on these movements, you need to see what happened on the flat. Yeah. So whatever rules you have here, you need to apply them after, because this is beautiful. Yes, I agree with you, but you know when it's going to happen. So you need to go backwards and suffer all the losses in here to see how many there are. Yeah. All right. So this is the combination, the one up, you see, and then we go, let's make it another, we say this is another level here. And then we go, and we go down, then we go, this is higher than this. This is not, this is lower, so I don't have entry there. So this is higher, so we go there, yeah. So imagine that you just found a way to enter here, or you just enter because you follow your rule, and then you add in more. When do you get out? Maybe you go a target. We can talking about another day about the target, but because it's important, many people, they don't actually talking about that. This is really, really important. And if you know traders, if you ask to traders, they say, how many rules do you have for your entry? And they say, oh, blah, 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 blah. They give you 1,000 rules. They give you everything you can imagine, all the things. And when you ask, okay, when you exit, Fibonacci level, because this and that, or because that's it, because it's too high, because it's 3 hours, that's the biggest mistake a trader make. If you want to make the difference between a good trader and not good trader, ask those questions. How many probabilities you got to go out? And I tell you, there is so many that it's ridiculous. It's more than actually entered when you enter the trade. Yeah. Anyway, so let's keep going this movement. So we got another here, and then we got those two short long. We got this one here. So imagine that I enter here. Wow, I take all this and I start to move my stop loss up. Do add more or not? I don't know. This is the biggest candle. So then after that candle, I go my stops, and this is the bigger candle. After my candle, I go my stop. So in this case, if I was risky, let's say, no, 2%. So let's make an example. Long position. So imagine that I do this. Yeah. So I couldn't make all the way up to, let's say that you do the last ones, 2, 3, 2, 1. Let's see. Let's have a look. Position, this one. So I don't even know how to use this. Okay, let's do this, and we're gonna do always. Let's say that we find a pattern of 3 hours. Yeah. Let's have a look. We're looking for 3 hours. 3, 3, 3, 3, and this is 3. Okay. So this is our 3. So we go our first entry here. Yeah. And then we're looking for final target is that one. So we're gonna have another entry in here. So we could keep this open. Then we open another one. Okay, so let's have a look. So we're gonna open, where was that? They open in here. and I'm looking for 3 R's. So 3 R's. So just to give an example, okay? You don't need to do 3 R's, I don't know. And I explained to you about this one, why I didn't close this one yet, okay? Position loan, and there we go, an entry here. And they were looking for 3 R's. Hold on. 1, 2, 3 there. Okay. So then I got another entry. What was that here? Okay, it was here. Why it was here? Yes, here. Just missed so many on top of each other that I lost the plot. Anyway, so 3. We're looking for. My stop loss is just 1 second. 1, 2. Where is my stop loss? Hey, this one here. Okay, so let me make it bigger. 1, 2, 3. All the way up to there. So let me make it correctly. There. So 244, and then there. So this is not loss. It's a loss as well. Well, it's a loss. We'll see in a minute. Then we got another entry. Position long in here. Where is that? On there. What is my entry? There, here. My stop loss is there. I think I missed one. That's fine. Let's finish the exercise now, and we go for 3. So now, what will happen with all these ones? Yeah, we got once. We got another one here. No, 1 second. This is the one for that. This one is 1, 2 here. I'm missing one there. Okay, long position is just there. Okay, and we're gonna have the stop loss just there. So many on top of each other, but anyway, let's make it bigger. I'm looking for 3 R's. Okay, to give you an idea. Okay, you see that depends of the stop loss. One of them will be bigger, another one is shorter, blah blah blah. Okay, so now, okay, what happens then? Okay, this one. Okay, the first one we don't close it. Yeah, this is giving a strategy now. How to decide the rules for placing stop loss when the drill. Okay, you haven't noticed that. Okay, for those ones didn't see that to come back by later, let me show you. So I do have volume. I do have a bigger volume. So the next one will be an entry. This is my entry. So I'm gonna use the 2 of them as a stop loss. So in this case will be precisely there. Yeah, at the bottom of those 2. Let's do the same simple here. Look, 1, 2, my entry. The stop loss is the loss of these 2. Let me make it here. Sorry, that's correct there. Yeah, it's a wick there. So and so on. The first one, this one here, you can actually use the candle normally. So in this case, let's have a look. This one will be actually the entry is there. So it was wrong to make it that one that way. Sorry. That's correct. If you notice, there one there, and we keep it that one there. Okay, so 1, 2 entry. So let me make zoom in. So and this one is totally, we're looking for 3 R's, so it's like a 3 R's and make it precise. So I just make it now correctly, yeah, to adjust everything as it is. Yes. All right. So let me go for this one is 1, 2 a stop loss. There we go. This one over there. Okay, I'm looking for 3 R's. This is 316. No, I'm looking for 3 R's only. That's it. Maybe 3.1 to cover the cost, commission of that, but it's fine. So this one here is 1, 2. So we got those 2 there, and I use this. So this is more like yeah, exactly. There is the loss of this one. This is a bit higher. This is my stop loss. Okay, so I'm looking for 3 R's. 3 R's, yes. This one is red, green. The next one I enter, which is wrong. This is a bit higher there because the enter is there. My stop loss is just this line here, which was this 2. Let me make it a bit lower, better. Okay, there. And I'm looking for 3 R's. So this is not done correctly. Let me see. 1, 2, 3. There. There. Okay. Then we do the next one is 1, 2. This is the volume's bigger. So this is wrong enter. The enter is actually in there. Okay. I cannot make it smaller. Okay, so the enter, because you got 1, 2, and the volume bigger was this one, because I will not take this trade. I will take after this one. So I mean this one, it will be the enter, and the stop loss is all the way down there. We will still a combination of those 2. Yeah. the lowest of those combinations. So the number of R's I want to make, 3. Let's go all the way up. Where are we going? All the way up, doesn't matter. 3 there, okay? Now, and the last one is the volumes bigger is this one here. So my entry exactly is on here, and we're looking for 3 R's, okay? The stop loss is the lowest of those combinations here, which is this low of those two, this and that. That's the stop loss. Okay, I hope it's more clear now. Yeah, just try to make it very clear. Now, what is the final result for these particular entries? Okay, let's have a look. So, what do we happen with this one? If this is a rule very simple. If it hit my target, 3 R's, I take the profit. If it doesn't hit my target yet, I will move my stop loss to the neo stop loss if I have a new entry. You understand that? So this is my entry, okay? And then I'm looking for, in this case, we can say 3 R's, or we'll say no R's. Yeah, we can say 3 R's, but we're gonna move it all the time. That this is gonna be what is called dynamic entry, yeah? So it means if I have another one, I'll move it up more and more. So it's not going to be, the idea is this is not closing by, it will never close by so make it to be bigger. So make it 6, because otherwise it will be a problem to close it. So it need to be much larger, yeah? Double, 6R, yeah? And the reasons behind you don't want to close this one, you want to close it by the stop loss. So let me explain it. So this one here, if you go the right one, perfect. But if you don't, you lost the trade, you lost 1R. Bye-bye, you lost 1%. Okay, fine. Now the next example, you're risking 1%, you make 3%. Now, this particular one, after this has been hit, or no, actually not be hit, after you have the entry, you move your stop loss to the new stop loss there. Okay? So now you have new stop loss, means you lost less money if they actually hit the stop loss, this one, okay, the second one. Now, this has been closed, 3 hours, thank you, bye-bye, 1 done. You keep going waiting, now you go another entry here, and then you stop loss from there, it will move to here. So what is the meaning of that? Is that automatically you are already in profit, yeah? Let's have a look. So if that my initial stop loss was down there, 0.38, now my new stop loss is 0.79, so already make double, okay? So make 2 R's already at this level, okay? Now, I know this is for basic traders, but guys, I'm not basic. So for me, it's sometimes difficult not to go super easy. So let me know if it's too complicated for all of you, okay? But anyway, so I continue this slowly. Now, the next step is that you see this trade. So we say this trade, profit, bank it, 3 R's, thank you very much. So let's make it a note. The other way I'm gonna forget about it. So let's make it a note and we say 3. Okay, 3x in that one. So I enter here and I have no 3x in here. See, doesn't work. I don't have anything. It's not yet because I need to go all the way up, but I go another entry, yeah, and it doesn't hit it neither. So now I go a third entry, yeah. And what happened with this initial one? This started moving up and up and up, yeah. I have not hit the stop losses. Look at that. So in this case, my 0.38 was that 0.38 was, yeah, something like that. No, it's a bit bigger because I move it up. 1 second. So 0.38. So from there, I'll be moving my stop loss to here, to there. So 42. Then I go up more. 0.95. Then I move more. What's that? A 2%. What's a lot. The next one is slightly more, to 13, and the next one is a 381. So 381 divide 0.35 was my initial stop loss. It will be a what was that? I lost it. What was that? 0.5. What was that? 695. 695. No. Oh man, I lost it. Hold on. What was the number? It was from there all the way up to this one, 375. So let's say 375 divide 35. So 10 times more, so 10.7. Okay, so in this particular one, this will be closed with 10x because I've been moving my stop loss up and up and up and up and up, yeah, and then it closed down in here with in total 10.7x. So let's go here and we do 10.7x. And I say the 7x because it's actually 10.7 if you measure. And why is important, this is covering all my courses. Now this one start to moving up, but it's not hitting the target, and I have to enter another one. Yeah, now I enter another one. Now you question that to yourself, is that do I need to risk in 1% in all of them? Well, you need to know your back testing correctly. You need to know how many losses can you have. Yeah. Now, but you remember, this one is already running in profit. So if you enter again here, you already have 1 R in there at least. Let's have a look. If I move my stuff lock to here, already 0.3. So I'll go 1 R already locked. So I'm risking nothing from this one because it's 1 R. Now if I go a little bit more up and I go to entries, this is already a what was that? It's a small percentage, or am I crazy? 1 second. 3, yeah, no, 2%. So now it's about 0.38 would be 4 for the, it's about 4 R's in here. So you can risk those 3, even in this one and then that one, because pretty much at the same level almost. So on this case, those 3 is free risk, is break even if those 3 went down, but you're holding it. Okay. So now what will happen with that? Okay, let's have a look. This one will be closed down in here. Done. 3 R's. Thank you. Another one. Let's make a note. 3 R's here. 3x. Okay. The next combination. This one. Never hit the target. You need to stick to your rules. Didn't hit the target. This is actually what happened with this one. You move your stop loss to here. You don't keep it there. But when do you move it? Yeah. So when you close this one, you close that one. So what will happen with this one will be end up in profit. Let's have a look. So from there, all the way down here, 129. We go all the way up there. My new stop loss 142. Let's call it 1 to 1. So in this case, you go 1x. Yeah, so do you trade this will be closed manually because you have closed this automatically while you're moving your stop loss. This is you don't put your stop loss in here. You just let it, if you actually the trade hit that, you get out. So sorry, this one was. So this is was testing 1x. 1x. For those ones that get a bit lost, yeah, just rewiring again the video, okay? And then ask me questions as we go. Now, because I'm telling you a full strategy pretty much, okay? Now, the next one, this one here, we have it, and the stop loss is connected to this line, and we're moving up to the next level. Let's have a look. So, what is this? So this is my 3 R's, so it's a bit lower. There. And well, it touched it, so we go 3x. Thank you. Another one. Bye. I don't care. Couldn't do it more, or maybe 3.7. I don't care. Done. Bye bye. This one. This didn't work. Yeah, we can see obviously clear that it didn't work. Yeah. But what happened with this one? This is 3x all the way up, but we have this one after. This is the last one. This is actually a loss, so we can call it this minus. Yeah, let's call it -1. So let's make the test. What is that? Here, -1 x. Okay, so this is a loss. Okay, so now when we have this loss, we need to close everything remaining. So what happened with this one? This was my stop loss was all the way down here, which is actually a 2.6%. You see, I follow the rules. Doesn't matter how far it is, at 2.06. Maybe later when you see the data, you say, oh, it's no point to do 2%, it's too much, blah, blah, blah. I can find another way. When it's too high, the percentage is not worth it. You can find combinations after, but first you need to get data, okay? And follow a stricter rules. Doesn't matter whatever they are. Now, you go all the way up here and say my trade will be closed manually because you're waiting for hit target. You will close manually this trade and 0.44. So instead of loss a 2, which is, let's say 2 is 100%, 200 divide 44 is equal 4.5. So you just lost a 0.2 in here. So we lost in here minus 0.2. Let's make it lower. I'll say minus 0.2. So testing this one. What is that? This is minus 0.2%. 2x. I believe this is correct. Review this exercise yourself, guys. Yeah. Obviously, it's not 100% accurate, but it's quite simple. It's for you to understand how you can create a strategy based on the right market direction. And obviously, this is brilliant. But what happens before is you need to work out this, the mess. Yeah. And then when you happen this, you know how to make money from it. Okay. Now, And then you can actually even see when this has happened, what happened before, we happy to show on the volumes, on the weekly, on the monthly. See if you can find a combination that tell you what happens before by the volumes, remember. So now we have finished this trade. So what do we have on then? Let's make the numbers. Let's make profits in my pocket. So after a month and a half, February, March, 2 months and a half, I have made 10.7 plus 3 plus 3 plus 1 plus 3 minus 0.2 minus 1. Now I'm gonna take away as well 10% of the profits I made, 19.5. So I can say that I lost as well at least 19.5 by mistakes. Let's call it 1% loss minimum. So let's call it 1.5. So we make 18 hours. So this is our final target. Our final profit is, thanks to this, is 18 hours. Now, what is this can be equal? If it was 100 pounds, you make 1,800. If it was 1% and you're looking for pass and evaluation account, funding account, you pass quite multiple accounts at once. Yeah, so it's not one. You will pass many percentage very quickly. By the end of this month and a half, you pass a lot. Now, this is nice. How many accounts you will blow up before if you don't have analyzed the data. Yeah, so you need to analyze the data before you create these kind of strategies, okay, to make you profitable. And please, hope you can actually understand this and be with us and make more with us. I need more traders working together, please. So I try to make as simple as possible for you. Follow a simple rule. Do not change the rules, whatever rules you have, even if you have too many losses, until you finish the analyze the data. Yeah. So what is the minimum data? We discussed this already. How much data you need to analyze that as well. Okay. So this is an example of how you make money on the long run with the right stop losses. You see, and that's it. Bingo. 18 hours in your pocket, which could be, if you're risking 1,000, you go 18,000 pounds. If you're risking 10,000, you got quite a lot of money. Yeah, make the numbers keep going up and up. But if you're talking about pro firms accounts, we can talk about 18%. So some accounts you only need to make 10%. You will make already 2 times your level up in 1 month and a half. Okay, so be aware of that. So now, guys, I hope you like these combinations. If you really like these patterns, volume. If you see, I haven't used any indicators. I do have indicators myself, all these ones, yeah, but I made them myself. So I made them myself of what I can see in the market. So that's different. There's something we can do something later to show you how you can make your own patterns, yeah, or your own indicators, right? So now, if you notice this, first you have a pattern, you got rules, you follow them, and then you do 100 combinations, 1,000 back testing, whatever you can have, whatever your numbers you need, and then you cross other pairs. It does work with other pairs the same way? Yes or not? Then you just will start to work in all this, cross all the pairs, 1 pair at a time. Works for me. I have done 100 trades or have done 100 combinations. I got too many losses. When I go 3-4 losses, the market is not going anywhere. Maybe you need to look the monthly and the weekly. You need to find something that telling you to stop trading until you have the right pattern to go long or to go short. Yeah. So, and this is the best way to do it, is to do simple stuff. You see, I didn't go to 4 hours, 1 hour. This is actually doing a daily entry. Would you like to do a daily entry? You say, well, no, it's all right. I want to make more money. What is 18 hours? 18%. So be aware of that, yeah? So sometimes it's not about it's like, let me ask you this question. You working 9 to 5. Many of you are still working. And the question I ask you, you would like to get paid every day? No, you don't get paid every day. You need to work the whole month. If, well, in some cases 15 days, but it's normally 1 month to get paid if you have done the job correctly. So thinking that way, do your job correctly for 1 month and then get paid. Whatever you make at the end of the month, get paid. You got minus 10,000 pounds. You haven't made any money. You have lost money. Next month you make 30,000 minus 10,000 the previous month. You got 20,000. Pay yourself a salary. You see, next month you make 20,000 again. Okay, pay your salary. Maybe you need to pay to yourself a 10%, 20%, or 40%, whatever you make, and the rest you keep in the account to grow more and more. there is another things that we can talk about. That there's a long way to a lot of topics we can discuss. For now, this is enough for today. So guys, tell me any question you have at this moment. If you do have question about what I've been explaining now, it's better to you watching again, have a look in details, and then ask me questions about it as an option. But remember, this is a pattern of many. So it's just a combination between volumes. And so how simple is that? It's just a volume take away from the other one is bigger. One is bigger, but the market is telling you going up, using it as an advantage. But if you notice, this has happened on Forex. It's much more difficult for us because we don't have access of that volume coming up so quickly. But in TradingView, you have this volumes past history that can help you to understand the market now. How to do okay. So I hope guys you love this video. I'm excited to talk about this forever, but I'm trading right now. I got a lot of positions open because tomorrow is a big news on the US market, and today is already a big movement right now. So guys, see you in the next video. Bye now.